All right, Profit Chasers Pro students, you guys made it to the basics, and I wanted to kick it off with how to read a candlestick. So without further ado, let's get right into it. So headed over to the green candle or the bullish candlestick. Now obviously as traders, you generally speaking want a green candle because green usually means money. So hopefully in your trading career you see more of these and less of these. So how to read a candlestick. In this example, let's just call this open line $1. This stock opened up at $1. Now it increased during this time frame. Each candle can have a different time frame. If we go over to my Thinkorswim, let me pull it over here. I am currently looking at the 5-day, 5-minute chart. Means I see 5 days of trading, and each candle represents 5 minutes. If I were to go over to the 1-day, 1-minute chart, it would show me 1 day of trading, and each little candle represents 1 minute. And if I were to zoom all the way out to 1 year, 1 day, this would show me 1 year of trading, and every candle is actually 1 day. So breaking down the candle, this rectangle here is called the body, and these long lines are called the wicks. So the bottom of the body in a green candle is where the candle opened. Now this is $1 share and it opens up right here and it goes all the way down to, let's say, 50 cents a share. That was the low. But during that 1 minute, it went from 50 cents a share all the way up to $2.50 a share, but then came back down and closed at $2 a share. Let me re-say that. The low of this candle, meaning the bottom wick, was 50 cents a share. It opened up at $1 a share, and within that 1 minute time frame, the absolute high of this candle was all the way at $2.50, but it closed at $2. So it was a whole dollar profit in this one candle alone. If we go over my sketch pad, which I have a lot of examples, in this example, this is called a hammer candle. This is where the stock opens up right here. The reason it's called a hammer is you can see that it clearly looks like a hammer. That's the handle and that's the actual hammer itself. So in this example, this is where the candle opens. Let's call this $1. Now in this candle, it goes all the way down to 50 cents. But in the meantime, during this 1 minute, it recovers all the way and then finishes at 150. That is a hammer candle. And now if the next candle was actually green, let me go over to the line. So hypothetically, when this minute is closed, the very next candle would actually open up right here, as this is where that last candle closed. And if it was a green candle, it would go up like this. Let me draw the candle here. Headed back to our live examples. Now this green candle right here, it opened right here. As you can see, that was the bottom of the red candle. It opened up right here. Its low was right there, the wick, and then it went all the way up to right here and it ended up closing right at the top right here. So if you guys can see the actual candlestick example, we will head on over to a bearish candle. Now a bearish candle or a decreasing candle, when it comes to the body, it's the exact opposite thing. Instead of the close being at the top, it actually opens at the top and the close is at the bottom of the body. The wicks stay the same. This is the absolute low and the absolute high, but the body is just the inverse of the bullish increasing candle. Now going back to our examples, if we go to this candle right here, it would open up right here and it would go all the way down to right here. That's the absolute low, that's the absolute high, and this is where the candle would end up or close. Going to the inverse hammer candle, this is where the stock would open. It would actually go up a little bit, but then go all the way down and close at the bottom right here. Going back to our live examples, this candle was a very big red candle where it opened up right here, as you can see, the top of that red candle. It went all the way down and the absolute low was right here at this level, but it came all the way back up and ended up closing right here about halfway through. Now the last example we want to talk about is something called the doji candle. This doji candle generally means indecision, consolidation. That the stock really isn't going up or down. It's staying at the exact same playing field. So this means that the stock opens up right here and it actually closes at the exact same point. Now it can have lows and it can have highs, but it means it opens and closes at the same exact point. Now looking at a live example, this right here, this little itty bitty guy right here is actually a doji candle where it actually opened up at 11.17, went all the way down to 11.15, the high was 11.19, but ended up closing exactly at the same spot where it opened. There's another one right here. and a few more in this area right here. You generally see this pre-market or post-market when there's a lot of consolidation going on and not a whole lot of movement. So I hope that answered all your questions about how to read a candlestick. I do have a video on actually candlestick formations and patterns that's really useful. And as always, if you have any questions about how to read a candlestick, do not hesitate to DM me on the Instagram at Profit Chasers or personally text me on the Discord. But if you guys think you have a hang of it, hit save and continue, and I'll see you in the next video.